Welcome, everybody, to Secret Sauce, the show where we unpack business tips, life hacks, and advice from industry leaders. I'm Karly.iacono. Today, I am pleased to be joined by Matt Bucaro, the Managing Director of Tauro Capital Advisors. Welcome, Matt. So glad you could join us. How are you today?
Hi, Karly. I'm good. How you doing?
Excellent. Navigating this wild market we're in, like I know you are as well. So never dull, never dull.
Absolutely.
Why don't you start before we jump into your advice by telling us a little bit about Tauro Capital Advisors and your role there?
Sure. So, again, Matt Bucaro with Tauro Capital. We are I would say, boutique capital advisory firm based out of Los Angeles. We have offices. We have about 5 offices now. One in Orange County, Phoenix, Dallas, Sacramento, and San Francisco. Our job is to raise debt and equity for all commercial real estate assets. My team, I run a team of 5. We specialize in all aspects of retail, whether that's ground up construction, value add, stabilized, and that is both single and multi-tenant.
So you have had a very interesting few months, I am sure, being on the financing and debt side. Instead of telling us sort of your secret sauce, or instead of starting with that, why don't you give us your view of the market quickly and what advice you have for buyers who are trying to secure financing for retail deals, specifically in this market?
Yeah, absolutely. Look, we're having this conversation 8 times a day for the last 30 to 60 days. It's just changing so rapidly that there's not a clear answer. But I would say that over the last 30 to 60 days, our firm has been referred more institutional sized clients than they have over the last 5 years. And that's just because their relationship lender is either raising interest rates to a point where deals don't pencil at all, or they're just completely halting all lending and saying, hey, call us after summer, right? Which is funny because when I worked at Chase Bank, my manager in 2008 said the same thing. Chase came to them and said, here's your salary, go sit at home for a year, right? We're halting all lending. So I would say in a time like this, my only advice to investors is really to hire or speak with good capital advisors, right? There are still lenders in the market, and what's happening is they're just this is the point in the cycle where they buy up market share, right? From the Chase banks and the Bank of Americas and the Union banks, right? So where those lenders are increasing their spreads and really kind of trying to halt lending, these other lenders are decreasing spreads, which is keeping rates attractive. Now, attractive is not 3% anymore. It's not 4%, right? Well, on a good day, it's high 4%, but right now what we're seeing is rates in the low to mid 5s. I do foresee, the Fed meeting in July and hiking again. It will normalize at some point, but having a good capital advisor who has a tap on the lenders, knows who's lending, is my biggest piece of advice. Look, we hope it's us, but choose a good capital advisor, whoever it is, who has a tap on the market and understands and knows who's decreasing their spreads to make your deals pencil.
So I want to unpack 2 things you just said in there. The first is the spreads. So for those maybe newer investors who are watching this, what do you mean when you say spread? And what does that look like right now?
Sure. So each lender is different, right? So their lenders will base their interest rates on a spread over either a 5 or 7 or 10-year treasury, which you could Google these on different websites. We use Y-Chart. Or they'll base it on a spread over prime, or one of the new rates is SOFR. Okay, and SOFR is increasing dramatically and quickly, and so has prime. I think prime's gone up almost in direct correlation with the Fed hikes. Okay, so the lenders will add a spread above those rates to get an all-in rate to their borrower. So a typical spread today over let's say a 10-year treasury would be anywhere from 150 to 250 basis points. right? Which puts your rate anywhere from, you could be, like I said, high fours to you're seeing some stuff in the low sixes for CMBS.
That's a big spread. So I think I would mention to anyone watching that finding the right lender is more important than it ever has been because rates are high. The spread between interest rates and cap rates is narrowing. So every basis point on your mortgage rate is going to matter to make deals pencil. So I think that's very interesting, actually, Matt, that some lenders are increasing their spreads and some are decreasing and to pick up market share. So everyone sort of has a different strategy right now.
Yep. Yeah, it's hard to keep in tune with who's doing what because it is changing so rapidly. But like I said, there are lenders out there that are trying to eat at market share and they're decreasing their spreads, so deals can still pencil.
And I think that's a common misconception that I want you to speak on with a lot of new investors that, maybe they bank at Wells Fargo. So they're going to immediately say, well, I'm just going to call Wells Fargo and they'll help me finance my new Popeyes. That's not always, well, not usually the right approach, right? Because different lenders have different buckets and different appetite for types of deals. So why is it important not to just go to your local bank and instead call whomever it might be? Of course, Tauro would be your first choice, but someone who works with a variety of lenders. Why is that a better approach?
Yeah, again, like you said, look, we hope it's us, but I'm always an advocate to hire someone, right?
Right.
And I'll tell you if it's someone that's better than us and if it's better for your business plan. But a lot of investors or buyers or borrowers in general tend to get relationship pricing from the Wells Fargos and the Bank of Americas in the world. And in a good market, which we've been in for the last 5, 6, 7 years, and at good leverage, and if you're a strong balance sheet borrower, that's great. And they're going to give you most likely the most competitive terms. But there are other secondary market banks that can compete with almost every term. I would say maybe not interest rate, maybe their interest rate is an additional 10 basis points. But to me, what I've learned over 10 years is that the certainty of execution from these lenders is much more important than the 10 basis points you're going to pay to get put through the ringer. So it's just important. Look, the Wells Fargos are great and they're going to be great, but they are going to be where secondary market banks and boutique banks are can get to the 65, 70% leverage still because they're using more aggressive underwriting. The big banks are going to be at 50 because they're having to underwrite their deals based on where they believe interest rates are going in the next 6 months. The crystal ball says they're going up, right? So they're going to underwrite up. Now, if the Fed slows down their rate hikes, okay, maybe their leverage is going to go back up because they're going to use a lower interest rate, but that's not where it's at right now.
So I just want to solidify what you just said before we move on to your next tip. And that's that certain lenders are pulling back their loan to value. And a lot of clients will come to me every day and say, what's the rate? What rate can I get on this? What's the rate? What's the rate? What's the rate? But if you can only get 50% leverage on a deal, that's material, right? So I would say to anyone listening, make sure you're looking at all the terms, like Matt just said, the rate, the loan to value, all these other pieces that go with it, the term, of course, and not just the rate out of the gate. And surety of execution is huge. So thank you for bringing that up.
Yep.
All right, so we need to go to a wide variety of lenders, cast the net wide to get the best terms and surety of execution in today's market. Did I sum that up well?
Simple enough.
All right. Let's move on before we wrap up to your personal secret sauce, business tip, life hack. What else would you like to share with everyone today?
Okay, so it's just an important quote that I believe in, and I kind of preach to my team, is that success is doing ordinary things extraordinarily well, right? So we obviously work with investors who purchase multi-million-dollar properties that have tight timelines and most of the time a lot of moving parts. I think being able to identify the ordinary things within a transaction that could go wrong or be problematic ahead of time is a big piece of advice I could give. Also, just know that you won't always be right? You have been in the business for a good amount of time and you're probably one of the top brokers in the industry, but you can't say that you have not dropped the ball on a deal, right? We all have. But just being able to know that there is a solution and identifying the correct way to get the train back on the tracks, to get the deal closed the smoothest way possible, will be a cause, what I think, for celebration and appreciation from almost all parties involved when the deal closes. So really just doing the ordinary things really, really well and understanding how to get a deal closed the smoothest way is my piece of advice.
I completely agree. And I think that's where clients are turned into long-term relationships, is through the deal process, right? It's one thing to market a deal, to get the pricing, but executing on the deal well and overcoming the inevitable challenges that are different in every single deal. It's really amazing how many things pop up, right? You know, as well as I do. But being able to work through those ordinary things in an extraordinary way is so important.
Yep.
Great piece of advice. Thank you for sharing. All right, I would encourage anyone interested in learning more about the financing markets and today's crazy world we're in to reach out to Matt directly. All of his information will be below. Matt, thank you so much for giving us that overview and your advice today. Wonderful to see you, and we appreciate having you on the show.
Thanks, Karly.
Thanks, everyone. That was Secret Sauce. We hope to see you again very soon. Take care.